Hey guys, Josh again here, looking to go over today for our main topic is going to be how to navigate risk. Everybody has their own risk appetite. Some people just literally can't have risk and they may be young. Some people may be old and have a lot of risk. There's a couple things you can do to help yourself. One, any long-term strategy you have, it is going to be more benefit. I'm not telling you to put it all in one stock, but usually if you tend to look at numbers over the long term, if you're willing to take a little more risk, yes, there are going to be ups and downs. But from my last video, when you're not looking at it every day, who cares what every day is happening? Because in the long term, your funds tend to go up. And the more risk you take over the long term, tend to have higher returns. You can diversify yourself to be able to mitigate some of that risk. But two things to focus on that will help you with risk versus returns. I like to look at it as really thinking roughly in general, if you're looking at a 1 to 10 scale, 1 being very conservative, 10 being very aggressive. And I'm not going to give you a specific recommendation on what to buy. I'm just going to roughly tell you what I know from my 12 years or 11 and a half years in the industry. Let's say anywhere from like a 1 to a 3, which would you say was on the more conservative side? You want to be somewhere around 20 to 35% stocks, let's say, depending on how comfortable you are. If you're going really 4, 5, or 6, somewhere between 40 to 60%. The higher you get up there, maybe leaning towards the 60. 7, 8, 9, you're really looking maybe towards 70, 80, 85% stocks. If you're a 10, maybe 90, 95%, 100% stocks. Whatever you're comfortable with is what you want to see. Look at your account over time. It's obvious to you after you see, hey, I've had my account for 5 years. I've been a 9 out of 10. I put 90% of stock risk or 90% of my account in stocks. I've made 9% over that time. You roughly get a general feel of how things go. You can look up online what the stats are for things like that. Hey, if I am aggressive, what does it look like? And really the 5 key areas in general in finance are conservative, moderate aggressive, and aggressive. Those are really your 5 primary, I guess you could say, your primary ways that an advisor would go over with you. But some ways to be able to take a little more risk and potentially get better returns for yourself. Set emergency funds aside. I said in a video earlier, about 3 to 6 months worth of emergency funds is great. If you can't do that, I understand. Put as much as you can away for savings. You can do money market funds. You can do CDs. You can do strictly cash with just in a bank. But when you have 4, 5, 6 months of emergency funds set aside, let's just say you have $2,000 a month in bills. Let's say $5,000 a month. Let's be crazy with it because some people do spend that. $5,000 a month in bills. You got 20 grand set aside. Okay, I know if I lose my job, if I have nothing else to pull from, if my investments completely tank, if I am not able to go back to work, whatever the case is, you at least have 4 months to where you can do absolutely nothing and be fine. That's a long time to figure things out. So usually 3 to 6 months, again, the more you can set aside, and you don't want to be completely cash because you will lose out. But that's the way to think about, hey, how can I make this easier on myself to be able to take a little more risk, to be able to not worry about my account all the time, to not be nervous every single time you look at the markets because you have 4, 5, 6 months worth of funds that aren't taking any risk, that you literally use at any time. And most of the time anyway, when you're investing like I'm talking about with these retirement accounts, you're not going to be using them for 30 years. Don't sell yourself short. You are a good investor yourself. You can be. It is very easy to do. I learned more in 1 month working in finance than I did in 4 years at college. And I went to St. Joseph's, a very good business program. And I went to school for finance. In 1 month, I've learned more than 4 years worth of schooling. So it's when you're using this practically and it means something to you, that's one other thing I would preach to you is, please, if you're going to start this and you want to be involved in it, be involved in it. It's important. Finances are important for you in the long term. They're important for your family, for your friends, for your well-being, for your health. Everything it shouldn't. I don't like that it does. But the world we live in, everything revolves around money. You have to have some sort of stable, well, of course, your job is going to help out, but you need to have some sort of stable plan set so that it's not a panic if anything happens. That's the last thing you want to do. When in life, if I sit here, I'm looking at you now at the computer. When in life Have you ever had a panic moment that worked out well? Never. They always work out terribly. It's when you set your mind to something, you don't even have to do that much research. You can do 10 minutes a night, 15 minutes a night, learn small little tidbits from me, from others, from the videos I'll be posting. You can learn these things slowly. And at least, hey, I learned this today. Write it down on a piece of paper. I learned this today, another piece. And then all of a sudden, you look back over a 2-3 month time frame, which you would have probably been looking at your phone anyway, or watching TV. Over a 3-month time frame, you now have 12 new things that you've taught yourself. That one, you'll feel good about it. It'll make you feel more confident in your decisions. 2, you'll know that, hey, I did the research on my own. I am very comfortable with what I know. So then you're even putting more confidence in yourself because it's something that you are doing and you know. And then 3, it's not like you're burdening yourself with anything. It is easy to do. Now, when I say easy to do, I am not a hedge fund manager. I can't do what those guys do. I never wanted to do that either. It's not worth the stress because there's easier things that I can do and I enjoy my life. I would say, though, put a little bit of time. That's all you need to do. Write it in a journal. Write today from whatever time during your lunch break when you're at work. You're going to be sitting there on your phone a lot of times. I see it all the time. Take 15 minutes and learn a couple things about finance. Write it down in your phone. Do a notes section in your iPhone, in your Android, whatever it is. You will learn pretty fast. Then all of a sudden, you're going to go, I know way more than I thought. And it's pretty easy to do. There's so many resources out there, so many websites. You don't even have to open an account to look at the resources. Take the time to learn it. It is not as hard as you think. I'm not going to say it's like completely easy because yes, you can, there's hiccups here and there. And I'm not saying anything is guaranteed, but I am saying have faith in yourself. You can be a good investor. It is not that difficult. All the daily obstacles you go through in a day, you're overthinking, you're dealing with your kids, dealing with a wife or a husband, or dealing with your job. Anything you do in a day, you've already overcome things that are much harder than doing 15 minutes of finance, which are only going to benefit you in the long run. Please take the time to do it. It is not too difficult. I will be here to help you if you need additional help. Put things, add some comments there in the sections, and I will answer everything I can. Hope this helps out, guys. Take care.